World markets, the US markets as a shut yesterday, were not like the best of health. Nasdaq, in fact, was down about 0.9%. Europe will come on screen in just moments from now. Up, but DAX is just up 0.25%. Sure, CAC is about 1% gain. I think our markets have the dips are being bought into, and the upsides are happening when most people do not anticipate. Is sure short sign of cash market deployment being happening. Now, very quickly, let me get the heat map up on the screen and show you what's happening on the large cap end. That shows you a picture. Just 4 stocks in the red. One of them is ONGC, by the way, and the stock which has gained quite a bit in the recent past, doing okay. And the market is up despite HDFC Bank and Reliance hardly being up in trade. What's leading the markets higher? On results, Shriram Finance up 10%, not a heavyweight, but up. Pharmaceuticals, Laurus, despite wobbly numbers, up 4%. Divi's Lab up 5.5%, presumably around CDMO commentary. Apollo Hospitals 4.5% higher. Adani Ent has gained about 3.5% too. Essentially, IT's done well. The Adani Twins have done well. Commodities are not doing too badly. It's a brilliant day of trade if you were a bull. If you had written calls, you are licking your chops, because certainly those only the brave ones would still sit on the calls being written. What an afternoon, Tamanna. It's something that no bull will complain about.
I'm very curious to see, Niraj, if the buying is coming from domestic investors or have foreign investors come back after 3 sessions of selling post-budget.
Yeah.
So that would be good to see. But the volume of the up move and the surge, the kind of surge, does tell us that no dip is going to be left unspared by investors in this market looking for opportunities. I mean, just 48 hours ago, we were talking about whether an increase in long-term capital gains tax is going to dampen spirits. Well, clearly not. Maybe that was a pain point, soreness which lasted a couple of days. It's been shrugged off in style. Look at the broader markets as well. If you're seeing the Nifty up about 1.5%, the mid-cap 150 also nearly 2% up. The small cap index doing okay, 1% up. I just want to quickly pull up the advanced decline ratio before we get to individual stocks, because let's see what the market breadth is looking like, and that's fantastic. Just look at that. 1:3 nearly advanced to decline. So this is a strong market overall. A lot of people have made money today. It's one of those days when it's not just individual or very select stocks moving. Auto stocks are leading the pack. We'll pull up the key indices. Autos leading the pack. Look at the rebound in metals, which were languishing in yesterday's trade as well. So let's look at the sectoral indices for a second, please. And you will see that, metals, they're right on top. Autos surging extremely strongly. You have a couple of numbers there which have contributed to it, Ashok Leyland, etc. But across the space, you've seen a surge. IT having a phenomenal day. Let's get into individual stories and see what's happening there. Interesting spike in general insurance plays this afternoon in trade. So let's pull up a New India Assurance, pull up a GIC. Remember, you saw something similar happening in life insurance companies a day after the budget, when the fine print made it clear that there was a TDS cut which would hopefully incentivize people to buy more life insurance. Not sure if there's anything in the fine print which has been missed here, or the market has now belatedly understood. But New India Assurance, look at that, 18% move. GIC, 15% move. SJVN has been a winner right from the start of the day. Massive order. An alternate energy theme anyway, really buzzing. So let's pull up an SJVN. We've got a 14,000 crore, nearly 14,000 crore rupee order from the government of Mizoram. 6% up on the stock, actually come off its highs of the day. Results impact is the other story. Ashok Leyland, Emphasis, Sobha. Let's just pull up a few of those. Sobha negative, of course, but Ashok Leyland very strong, and we'll get you a deeper report or a more detailed report on what's worked for Ashok Leyland this quarter. Emphasis is also fantastic numbers, so nearly 7% up there. Federal Bank getting hit to some extent by the RBI draft guidelines. They want to increase the liquidity coverage ratio for retail deposits which can be withdrawn easily through digital banking. Federal Bank expected to be hit a little more than the others. Will have to increase its buffer, so 3.5% down over there. MMTC is one that I wanted to point out, has had 3 great trading days. This morning as well opened up. Look at the heat with which profits are being booked, 11% down on an MMTC. Just a couple of more because so many interesting stories in the market this afternoon. Indus Tower and even Vodafone on the back of it, they sometimes go hand in hand, but Indus Tower in focus. The board is considering a buyback of shares. That stock up about 4%. And let's look at Mankind Pharma. This was the buzzing stock in the morning. They're acquiring Bharat Serum. The cost of acquisition was always weighing on the minds of analysts and experts. That's clearly the reason why the stock is perhaps 4% down in trade. But, these were some of the few losers that I could spot, Niraj. But overall, I think the warmth with which the market has embraced the opportunity to acquire stocks at a lower level has been incredible. I mean, look at a Paytm, for example. The story has been in the news, buzzing, but that Paytm stock just completely running up today.
Lots of things flying around. Tamanna is right. Let's get in a quick fundamental view from Gurmeet Chadda before we dive into the charts and the numbers. He's managing partner and CIO, Complete Circle Consultants. And Gurmeet, great having you. Thanks for talking to us. We'll make this quick. But what's happening? Who's lapping up the stocks?
Niraj, I think the market seems to be shrugging off a little bit of the budget concerns. There was a bit of a reaction with capital gain changes happening, also in short-term capital gain. But eventually, if all asset classes have now parity on long-term capital gain, the preferred one obviously gets more. So I think we got to probably see some FI numbers more in terms of making clarity on today's move. But I think in general, Niraj, one good thing which is happening.
I think we seem to have lost Gurmeet. Can't quite hear him. Let's just wait for that line to get patched again before we talk more about it. Brijesh Singh is with us as well. Brijesh, how do you look at this, the charts this afternoon? Does this open up upsides? Would you be a buyer at the current levels on any of the indices?
So good afternoon, Niraj. No, I would still prefer to be seated, not at this level, like if I talk about the Nifty, prior before the budget happens, the Nifty resistance was 24,880 it was coming, and it made a high of 24,850. Now still, we are near the resistance zone. So either this 24,880 surpasses, then one can look out for a buying and, look for the target of 25,100 or 25,200, or either it drift towards the level of 24,600 in cash, then one can look out with a stop loss of 24,500 and then again play for the target of 24,800 or 24,880. So at this level, try to odd, but no doubt trend is positive. If we look at both the indices, bank indices and Nifty, the Nifty chart is from past 2 weeks or more than 3 weeks time frame. The charts of the Nifty were much stronger as compared to the Bank Nifty. Bank Nifty still has been struggling now since the previous important support was 51,500. Still we are trailing below that level. So till that level is not been crossed on the higher side, we don't think anything coming for support for the Nifty from a banking side. Otherwise, downside it has a support at 50,600 to 50,800 marks. So let it cross that 50,500 on the higher side for the Bank Nifty. Then we can see Bank Nifty jumping back towards the level of 52,100.
So some I would say a sober voice there on an otherwise very exuberant day. Gurmeet Chadda also back with us. Hi Gurmeet, good afternoon. You started by saying that this is possibly the market shrugging off those concerns about long-term capital gains tax and realizing that all things being equal, the Indian markets or equity investments still look preferable. Now, within that lot, today, of course, is one of those tide swells where everything looks great. What do you make of financials? And I'm asking in the context of Shriram Finance, complete sizzler of quarterly results, great numbers as well, the stock performing brilliantly.
See, I've always believed that if once the regulator gets into a slightly, proactive mode in terms of identifying stress areas, concerns on liquidity, deposit growth, it's always a time to be a little, neutral about it, right? And RBI, for example, if you see last a year or so, started with fintech lending, some actions came, then it was unsecured loans, then it was gold-related loans. Now they are flagging off some concerns on the deposit side of it. So obviously they will try and do more measures to safeguard the system, which is very good for the medium term. So if you are a long-term investor, it's a good time to actually accumulate quality names which have struggled, where cost of funds have gone up, or there have been some kind of, regulatory interventions which are more, nothing to do with, ethics or integrity, but which are more to do with system stability. And it's a good time to be a little counter-cyclical there. So I think private banks make a lot of sense. A lot of PSU banks, I've not seen them trade at 1% ROA for so long. So a lot of them, are seeing structural changes happening. That still makes sense to me. A lot of them are still at around 1, and even SBI is today 1.5 book value if you take, FY26 numbers. So PSU banks make sense. Some of the good NBFCs are going through a very rough patch, in my view, while markets are at all-time high. Your likes of, let's say, Bajaj Finance or even a Poonawalla recently, I think are struggling. So if you are a little counter-cyclical, let's say my sense is 2 or 3 months you should see a first rate cut and some drop in cost of funds and bond yields, and that could be a good trigger. It happened with IT. Everybody was so bearish on it just about a month back. Just see the movement which is there. I think something similar can happen in financials once the rate cycle starts the other way.
So we're going to get a more detailed view on, or a detailed report on Shriram Finance, but I just want to come back to one thing you said. You're obviously referring to the RBI guidelines on LCR, Gurmeet. And
yeah.
Are you concerned? And
no,
if those come through, then which are the kind of banks that look like they'll have a bit of trouble?
So I think there will be some near-term impact, as you rightly pointed out, on banks using digital channels more for retail deposits, etc. But, overall, the deposit growth has been a little bit of a challenge. Look at, for example, HDFC. HDFC Limited used to get a lot of money from trust because of Section 8, companies were authorized to do HFCs, right? The bank will not get that kind of a segment in deposits from that. So now they have to be reliant more on granular deposits and other bulk deposits on the corporate side. So I think deposits in general have been a little tight, and banks with good CASA franchise will be able to weather it better. So you got to see banks which have really worked on changing the mix of their liability more in the last 2 or 3 years. So banks have done a lot of OPEX in opening more branches, at the same time working on digital channels, whether it is ICICI, whether it is Axis, whether it is HDFC, and some of the good ones like Federal Bank with a new leader now coming, have huge respect for Mr. Manian for what he has done in building Kotak over last 2 decades. So I think good leadership, very granular liability franchise, I think will surely get differentiated from somebody who relies more on bulk deposits.
Okay, Kotak doing okay today. Federal Bank actually in a bit of pain because of how it's structured possibly, and there's some notes out there identifying Federal Bank as one of the banks with a higher ratio of retail deposits which might get hurt if the liquidity coverage ratio actually changes like the RBI is proposing. But let's just talk about Shriram Finance for a bit. That stock has been an outperformer, and that too because of its quarterly numbers. Its results were out today. Harsh is joining us with that earnings overview. What has worked for Shriram Finance, Harsh?
Well, Tamanna, let me first off start with growth. Growth has been extremely strong for Shriram Finance, 21% year-on-year for 2 quarters in a row, 5% and 4% sequentially on that higher base. So they're definitely doing better where growth is concerned. So that's one part of it. The other one is with regard to asset quality, it's remained pretty much stable and flat. Growth's possibly aiding that asset quality, at least the NPA numbers in terms of percentage. But, overall asset quality in this environment remains stable. For a NBFC like Shriram Finance is definitely a positive. When we've seen some slip-ups from a Bajaj Finance, from an Axis Bank, we've seen some slip-ups with regard to asset quality. And therefore, this is likely also another very good positive when you're looking at Shriram Finance as a whole. Third is with regard, of course, to the larger picture. When you zoom out, the divestiture of the housing finance business should likely push growth higher because, it should allow the NBFC to focus more on the segments it actually wants to focus on. That's one. Second is it's going to be a higher margin business because housing finance is a lower margin business in general as well, and therefore should allow its NIMs, which have just contracted a bit in this quarter, to possibly recover to that 9% mark just by removing the housing finance segment of things. And therefore likely they've guided for just about a 15% growth. I miss saying that. So 21%, 2 quarters in a row, guided for 15. I think it's a very strong number overall.
All right. Thank you for that, Harsh, and thank you, Gurmeet, also for joining us today. I'm just going to get a quick take from Brijesh on what some of your picks are. I believe one of them is Shriram Finance.
Yeah, Tamanna, why? Because when I was looking the shorter term time frame of the charts, the trend line has been broken down, and the stock has been moving up with a huge volume. So it indicates further upside. Present rate can be used to go long to 2933 is been quoting, keeping a stop of 2785 and play for the target of 3175 to 3200. Time frame to hold the counter would be at least 2 to 3 trading sessions. Another counter on the buy side would be Motherson Sumi. It has in the process of forming the rounding bottom. Now it can further move up. The shorter term time frame, if we look at the chart, then it's been moving up the longer term moving average, so it indicates on that it can further move up on the higher side. So 195 around the stock has been quoting. Present rate can be used to go long with a stop loss of 187. Play for the target of 205 to 207. Time frame to hold the counter would be 2 to 3 trading sessions.
Okay, well, interesting, some names out there. Remember, as Tamanna said, there are some stocks which have not done well too, but it's a day which belongs right now to the gainers. And as we hit into that break, we talk about elections and budget, which having a significant impact on markets this year. But while markets were taking a big swing, Sridhar Shivanov of Enam Holdings talks about changes in the portfolio strategies, if any, and why he likes financials. Listen in.
No, I don't think the portfolio strategy changes. The budget was broadly an extension of where we were, barring, say, a little bit of push to consumption. But I don't think that makes a massive difference to the listed consumption space. And I think broadly it remains the same. I mean, I think incrementally the market's becoming more and more a bottom-up market than a top-down, because within each sector, some of the stocks are trading at fair value or above fair value. So it becomes difficult to take a really top-down macro call and buy anything. So individually, you'll find good stocks. Maybe one or two sectors here and there are looking good, but even there, everything is expensive.
Welcome back. The stock that just will not stop surprising is Paytm. 197 once again in the news today, and one of the reasons is this NDTV profit exclusive. Paytm payments may get funding from China-linked investors. Remember, they were awaiting government nod for this. This was a huge headwind for the company, and really that problem may have lifted. Pragati is joining us. Pragati, what are you picking up?
Right, Tamanna. So the stock is definitely up 10%, and the most likely and the immediate reason for that is a reaction to this news. So Reuters reported at first that Paytm has gotten the approval for Chinese investment in payment aggregator unit. We also have now confirmed it from all our sources that yes, the approval that was pending from an interministerial department or that was coming from the finance ministry has now been received by Paytm. So Paytm Payment Services will now get the funding from China-linked investors. Now, with this, what exactly happens is that the approval that was anyway pending at Paytm, it will now clear the way, because the government has now given this approval. It will now clear the way for Paytm in order to go to the RBI and finally seek the payment aggregator license. Now, the government panel had earlier held back the approval due to several concerns, especially about the Antfin, which is a Chinese firm's stake of 9.88% in Paytm. However, since this approval was pending for last 1.5 to approximately 2 years, with the approval now coming in, it clears the way for Paytm to now go to the RBI and seek a payment aggregator license. Now, let me be very clear. While it has opened the way for Paytm to go to the RBI and definitely showed some hope that there will be a revival of business, it does not mean that Paytm has received the payment aggregator license just yet. There is still a step left. RBI is yet to evaluate the whole thing, and the final license approval will only come after RBI has vetted the whole thing. Now, just as a context here, on 31st January, RBI had also asked Paytm Payments Bank to stop certain services, and the business was heavily impacted. We also saw this in the quarterly numbers of Q4 and Q1 when Paytm brought it out, and they openly said that the actual financial impact of RBI's curbs on Paytm Payments Bank will be seen, or in fact has been seen, in this quarter. Back to you.
All right, thank you for that, Pragati. Important story then just could be the turnaround that Paytm was hoping for. I'm sure there's more to it on why this nod has come in and why it didn't before. It's taken quite some time, but look at how that stock has skyrocketed. Brijesh, I think Paytm has been an astonishing story end to end. What do you make of it right now?
So right now it is on the circuit first of all, and if we look at the chart, still promising. The longer term moving average value has around 620, and the previous swing high was 488, around that has been broken. So in coming session, if it doesn't break 480, keep that thing as a stop loss and play for the pullback target of 600 to 620.
Okay, well, 9.5% or 10% higher for a Paytm. Some really strong showing for this stock. But remember, while this is story backed and doing well, it is not alone. I think a set of pharmaceutical names today, and particularly the CDMO players, have done really well. So Lotus is a bit of a surprise mover, but maybe because of the guidance that they've given and the fact that they've spoken about how the CDMO business will pick up. And maybe that is something that is helping Divi's Lab as well. Up about 5.5% in the session today. Is CDMO business, which is the custom synthesis business, starting or showing signs of revival? Pull up Divi's Lab as well for a moment, please, because that stock has really shown a promise, up about 5% as we speak. Brijesh, any thoughts here on Lotus and Divi?
Yeah, so Niraj, if we see that Divi's Lab chart on a daily time frame, it was in a very narrow range. You know, higher side was 4,640, downside it was 4,480 around. Today that range has been broken. The candlesticks formation is bullish, engulfing, positive sign. With the volume, if you look out the average volume of say 10 days or 20 days, the volume has been given the breakout. Indicators are pointing towards the north sides. So I feel if someone wants to go long, keep a stop loss of 4,500 used to go. Present it can be used to go long. Higher side, I'm looking at value at somewhere around 5,100 to 5,150. That is where the resistance lies. So one can go long on TVs at present rate. Regarding with the Lawrence Lab has been considered. The previous swing highs were at 484, and from there it went down all the way to 425, where the longer term moving average as a values is taken the support and it has bounced back. I feel if we are not able to break 427, then we can see a pullback towards the level of 480. But if we compare both the chart with Lawrence Lab and the Davis Lab, I feel the Davis Lab chart is much more strong as compared to the Lawrence Lab.
Noted, Brijesh. Well, we will tally this next week or week after next. What does Shriram Finance do? But for now, take a moment to thank you for joining in today and giving us your thoughts. Really appreciate your time.
Thank you.
But when you're speaking about the CDMO players, Laura's Labs, the stock is up 3% as we showed after the guidance numbers, presumably. Here are what Dr. Satyanarayan Chava, CMD of Laura's Labs, had to say.
There is currently our EBITDA margins around 14-15%. If that all expenses went through the balance sheet, and if we do extra revenue, since our quality of gross margin is good, around 50%. So EBITDA margins will keep increasing if we start having more revenues. But what is important, what is interesting to look at is the growth will come from CDMO. So when CDMO drives the growth, the margins are better in CDMO, and everybody knows. So our EBITDA margin should definitely go. And what we mentioned by end of this year is not that we achieve 20% margin for Q4. We want to achieve 20% margin for the entire year, EBITDA margins.
welcome back. We're having a very exciting afternoon in the markets today. We are in complete TGIF mode as we speak. You have Cipla numbers coming in and a beat at first glance, definitely. You're also 23 points away from the all-time high of the Nifty. So a lot to unpack. Let's start with Agam, who's getting you all the F&O cues. Well, celebratory mood there. The party hats need to be broken out, Agam.
Yes, and in fact, we are actually waiting on that new lifetime high. Of course, at the moment, the most important level for the Nifty is 25,000. And should we move over to that new life high, we'll just be 150 points away from 25,000, which isn't much at all, right? And so in general, of course, we're looking at more strength. And what a day it's been. Today is not even a day of expiry. It's just taken a lot of traders by surprise. In fact, this morning, throughout the day, in fact, we were talking to a lot of analysts, and a lot of them, technical analysts, are suggesting that, yes, this move has certainly been surprising, and it's something that they weren't factoring in. That said, for the now, of course, we're looking at a whopping 10% increase in open interest towards August futures. Early days, sure, for August futures, but still, we are seeing a significant increase in OI there. Even as we talk about the Bank Nifty, earlier on in the session, there was a lot of weakness, but the Bank Nifty was forced to, advance as well. This one is also up around 0.8%, and again, recovering and moving back above the mark of 51,000. So this is where we see a little bit of a decline in open interest. That's also because, to a certain extent, there's some shorts into the system too. So short covering potentially seen as far as Bank Nifty goes. We talk about the options market, and at this point in time, just look at the reduction that we've seen in 25,000 calls. Naturally, a lot of call writers have moved out of the way, considering the Nifty has moved higher, and consequently, we've also seen a lot more writing in puts, lower level puts, around the 24,500, 24,600 and 700 marks as well. Remember, the 24,500 mark has been a little bit of a pivot, and it does seem like the Nifty has catapulted over that particular level, and for now, 24,500 becomes a very near-term soft support of sorts as well. Now, let's talk about stocks, and in terms of stocks, naturally there will be a lot more gainers as compared to losers, but you have Apollo Tyres, we have something like an India Cement, along with something like a Manappuram Finance and TVS Motor Company, all of them advancing with good longs coming through. Even in terms of short covering, a lot of these counters looking at a decline in open interest, but an increase in the underlying. And well, you have Ashok Leyland, Petronet LNG, Bajaj Finance, along with Wipro, all of them advancing in trade. So today is a day where we've seen advances for the benchmarks, and even on the benchmarks, it's been a secular run. It's not just a heavyweight like HDFC or a heavyweight like Reliance, which is pushing up the index. It is essentially a whole host of companies which are coming together and taking the indices forward, and that perhaps is the big highlight for today.
All right, so that is something to watch out for. We're seeing Sensex crawls back, to mark 81,000. I think we're galloping back, more than a crawl right now. That bottom line over there, we need to fix that. But you're about 1.5% up on the Sensex. You are near the all-time high on the Nifty, and yes, Cipla first cut. We're going to get you all the details over there, but let me just pull up the intraday chart for Cipla, and you're seeing a spike in the stock definitely from what we can see right now, 4% up. It seems to have beaten estimates. Remember, this quarter was supposed to see or expected to see a bit of impact because of the restructuring of its trades generic business. And it seems to have beaten those expectations. The margins at 25.6% versus Bloomberg estimates of 24%. Revenue in line with what was expected, 6% at 6,694 crores. And EBITDA margins also up 15% at 1,716 crores. Before we get a more detailed view on the internals of the numbers, let me welcome Rahul Sharma of JM Financial to the conversation today. Hi Rahul, great to speak with you. Siddharth Khemka of Motilal Oswal Financial Services also with us. So good afternoon to you as well, Siddharth. But Rahul, let me begin with your take. Let's just start with Cipla on the chart, since it's the talk at this moment. Nearly 5% up now.
Yeah, absolutely. Pharma is having the time of its life. The pharma index hitting a record high as we speak, and it is these heavyweights which have been contributing today from the word go. Now, as far as supply is concerned, I would suggest, in case you're holding long positions, this is a good time to cash in on the profit. 1582 is where the June high is. So, in case you have short-term long positions, good to take some money off the table. However, if the position is, slightly more medium-term positional view, I suggest, this has got long legs and the stock can head towards the 1700 mark in the month of August as well. So it really depends on what kind of a time frame you have the position. But as of now, the way Pharma Index is positioned, we feel that there is more upside to be had. And especially, if there is a dip in the short term, this can be a brilliant buying opportunity in the same.
All right, Siddharth with us as well. Siddharth, very good afternoon to you. What a fantastic day on the markets. Obviously all those concerns seem to have been shrugged off for now. I wonder if you're seeing big foreign buying coming in. We'll know when those figures are out. But do you think that the uncertainty has sort of eased on what the real impact of these long-term and short-term capital gains tax increases would be? Is that what we're seeing?
Hi, good afternoon. So I think market is kind of now discounting the fact that these are the new normal and you have to live with these kind of taxes. So now the only thing left in the hands of investors is to focus on the core fundamentals, focus on earnings growth and stocks where you can make or create wealth. So I think those things are of quite importance. We saw Indian economy being very strong yesterday. US GDP numbers came in at pretty good. That kind of gave hopes for further improvement in global economy. So right now, India is the only or among the few shining stars in the global economy. But if US economy starts, which is the mothership, that does well, that could bring a big leg up to the overall global equities, and that also raises the hopes of an early rate cut which has been delayed for almost 6-7 months now. Again, that could lead to improvement in liquidity flows, especially from some of these FIs which have been kind of net sellers for last couple of months.
All right, Varsha also with us. Please stay on, Rahul and Siddharth. We just want to unpack the Cipla numbers because that stock is just firing away. Look at it in the last couple of minutes, in fact. Varsha, have you had a chance to look at some of the details and see what's worked for Cipla?
So yes, Tamanna, so if you see, revenue is up 6% while analysts were expecting revenue of 8%. Now this may be because of low single-digit growth in domestic market. But US sales were expected to be steady on the back of, cancer drug Revlimid. Also, if you see EBITDA is up 15%. Again, it did beat estimates, while net profit also did beat estimates. Now, analysts were expecting because of the change in distribution model, their earnings may get impacted. But in last quarter, Cipla highlighted that they are not seeing impact on earnings because of the change in distribution model, and we are seeing in the revenue and the profits that the impact has been not there. So, according to me, so this is on the back of US sales because of the cancer drug, and of course the domestic sales would have been given a single-digit growth. But we need to see the press release that company will post.
Wow. Okay. Some really sharp, smart moves there for Cipla. 6.5% for this one. The beauty about today's session seems to be that large companies which are coming out with good numbers are getting rewarded. Look at what happened to Shriram Finance. Look at what's happened to Cipla. And just the momentum in a clutch of other names. I mean, metals doing what they're doing in the session today. Rahul, one, your ideas, because we are just about 18 minutes away. But two, a word on metals as well. It's not that the Chinese data is looking rock solid, but the move in metals today is very, very strong.
So a few sessions back, it was metals which saw the maximum short activity, and after this sort of mini capitulation of sorts in the metal index, we are seeing a very strong rebound. Now, whether this is a bounce back or a proper reversal, only time will tell. But as of now, it seems like at least 2% more upside can be had in the metal index, which translates to about 4 to 5% upside in the metal stocks as well. So our sense is at least a couple of sessions more, this momentum should continue, and we can very well see these stocks do well over the next few sessions.
Okay. Siddharth, from the larger moves, the way their stocks have moved, what is it that you guys are now telling your clients in the dealing rooms to do? I mean, what is the dealing room telling people? Because we knew it was an expensive market ahead. There's capital gains tax, and then the market is just a sniffing distance of all-time highs.
Yeah. So, Niraj, if you look at, we have been slightly defensive in our approach last couple of days, especially after the budget. So, some of the defensive sectors like IT, Pharma, healthcare, and consumer, these are the names where we are kind of suggesting to go positive on. Some of these sectors have not participated, so valuations are comfortable. And if you look at some of the numbers from these sectors, be it consumer, be it IT, be it your pharma. So some of the companies are coming out with good and strong numbers. So that is also helping in the churn that we are witnessing within the Nifty or the large caps, the sector rotation that is happening. Mid and small cap surprisingly doing well even after the tax gain. So that is something which I think is kind of liquidity driven and beyond fundamentals. So some of the stocks we know valuations are expensive. Even the index valuations are at a premium to large caps. So it's best to have about 60-65% of your portfolio towards large caps, and within that also about 20-30% in the defensives. The largest segment of the Nifty, which is your banking, that is largely underperforming. We are seeing results not being that strong, and on top of it, the regulatory new regulations coming up, which could only add to the overall pressure in the current environment. So banking, something which we believe could underperform in the near term, and focus on some of these defensive sectors is what we are suggesting at the current juncture.
Okay, and Siddharth, what within, so you mentioned the range of defensive sectors. I mean, what are the favorite stocks out there? Is it, does FMCG take a precedence over IT? What is happening? Because IT too is one of the best performing indices today.
Yeah, so if you look at again within the defensives, so before the budget, we went a bit more on the FMCG side. After the budget with the results, now IT is taking precedence, followed by Pharma, and then your FMCG.
So while we're talking about FMCG as well, just look at what's happening with the Nifty, about less than 8 points away from the all-time high of 24,854. Exciting times. Rahul, what's your Nifty call right now?
Yeah, so, Nifty is something which is, anybody's guess. I think 25,000 mark should be anytime soon. But I think the bigger picture is the individual stock-specific big moves that we are witnessing, as we speak. So, few of the tire names come to us, the auto names come to my mind. One is Escorts, which looks pretty solid at these levels. The stock is ready to move after the big consolidation that we've seen over the last few weeks. Our sense is they should head towards the 4,400 mark. Can be bought at these prices with a stop loss of 4,050. Another auto ancillary name which looks good is the Apollo Tyre. Now, tire stocks have been doing well. Apollo Tyre has been sideways since the month of February, and there are multiple tops being taken out around the 550 area. It did try to take that out intraday, but I think sooner than later this breakout would take place. We are very positive for a target of 600 on Apollo Tyres in the month of August series, and one can look to buy it in the futures for this month. And the stop loss can be placed at 520. So, auto and auto ancillary is where the focus is, especially where, there is compression, there is consolidation in place, and we feel the breakouts can be big, going into the next few sessions.
All right, so the autos could be some of the complete winners over there. Rahul, very quick view on IT, because we're going to get a detailed piece on what has worked for IT companies, and it is one of the top performing sectors.
Yeah, so if you look at what has happened in the last few days, IT has done excellently well, but this is only a catch-up rally of sorts. We feel IT has got long legs. The index heavyweights like TCS, Infosys have not given up yet. In fact, it is the tier 2, tier 3 stocks which are now participating. So our sense is IT has got more upside, going ahead. And especially after the last few days of sort of dilly-dallying, now I think, IT is ready to, march upwards in the coming few sessions.
All right, Rucha joining us with a bit of a view on which have been the best performing IT stocks in this entire up move, and of course a lot of it based on its quarterly numbers. Yes, Rucha?
Thanks, Tamanna. So all in all, Infosys was the best performing stock because it had a beat on all the three front: revenue, margins and profits. All of the three beat the estimates. But when we look at the worst performing stock, it was Wipro, which disappointed the street. Also, if we move on to the next slide, wherein we are comparing the estimates with respect to the actual numbers, we'll see that a mixed numbers is what we found in HCL Technologies and even in LTIMindtree. However, Infosys, as I mentioned, was a beat on all three front. Moving on to the guidance part, we'll see that the Infosys has revised its guidance upwards, the FY25 constant currency growth guidance. But mind you, this is largely because of the Intech acquisition which the company had made. So majority of the growth will be coming from the Intech acquisition. Meanwhile, HCL Technologies retained its guidance and Wipro guided for a muted second quarter. And this is why the street was really not happy about Wipro. But then we move on to the BFSI performance of different companies. Now, BFSI is largely the segment from which majority of the companies get their revenues from, like the majority of the revenue, most of the companies get it from BFSI. And BFSI was softer for all the companies during the quarter. However, Infosys was the one which reported a good, healthy growth in the BFSI segment. Talking about Tech Mahindra, communications vertical was weak, and this was one thing to be watched out for during the quarter. So a little bit of more waiting for the street, looking forward for turnaround story in Tech Mahindra under the new management. And lastly, we'll talk about what an analysts recommend on the street for the different companies. Most of them are bullish on TCS and Infosys, with more than 60% of them having a buy recommendation, and most of the brokerage houses are bearish on Wipro, with around 60% of them having sell recommendation. So Infosys and TCS are the best bets, while Wipro is the one on which the analysts are bearish on.
Wow. Okay. Well, Infi looking the best. Siddharth, if you had to bet on a large cap IT name now, would it be Infosys? Would it be some other? Would it be a non-large cap IT and a mid cap IT name?
Niraj, we would go with the large cap name Infi. After the results, it reported a very strong revenue growth. Guidance was pretty good. Commentary on the growth recovery in North America as well as the financial services was encouraging. And we are expecting the discretionary spending cycle to turn and become favorable over the next few quarters, for which I think Infi is one of the best suited and would be the key beneficiary of increased IT spending momentum. Currently, we have a buy rating with a target price of 2,000. Would be our preferred pick within the IT space.
You know, the other two spaces which are really in focus is auto and, of course, pharma. I'm going to come first to Siddharth on his view on pharma. And I mean, just look at the Cipla numbers. We're getting some of those details coming in, and their US business has grown at an all-time high. And that could be some of the reasons that you're seeing this kind of an up move in Cipla. Let's just quickly pull up that Cipla chart. An all-time high revenue of $250 million, up by 13% hit for Cipla, nearly 6% up. Siddharth, are you liking pharma stocks, or do you think this is a defensive play for some time? Do you think the time has come, as Rahul said a short while ago?
So, Tamanna, if you look on the earnings front, after several years of weak numbers, last 2-3 quarters, the numbers have been improving and encouraging. Even for this quarter, the aggregate earnings expectation for pharma is about 21% earnings growth, and that is a pretty strong earnings compared to the overall earnings expectation growth of around 10%. So within that also, the domestic business, domestic formulation or DF as we call, is on a steady, you can say, wicket where we are seeing strong growth, and a lot of these companies are reporting strong numbers on the domestic market front. The US generics low base effect is kicking in, and hence Y-on-Y growth trend is looking better. Within the, as I said, some of the domestic focused companies are likely to do well, and they are reporting strong numbers there. Within the overall healthcare space, hospitals are also reporting strong improved occupancy as well as improved profitability and sales. So that is again something that within the overall pharma space, healthcare space, that is doing well.
What about autos, Siddharth? Another space which is having a brilliant day, and for some time now, autos, Auto Ank, that entire segment has completely been firing. Any favorites there?
Yeah, so if you look at auto again, there was some concerns during the time of the elections. Growth on the secondary growth did not pick up, but now again we are seeing on the monthly basis two-wheeler sales as well as the passenger vehicle sales doing well. CVs are steady, but tractors is something again not very strong. We are expecting things to improve once the election is done, and post-monsoon tractors should also do well. Commentaries from tractor companies, especially M&M and Escorts, are not that strong. So the focus remains on two-wheelers and passenger vehicles. Even in passenger vehicles, the SUV segment is doing well. The EVs business is doing well. So Tata Motors, M&M, these are among the preferred picks within the auto space, followed by Ashok Leyland in the CV space. If we are expecting a recovery in the second half, stronger growth in the CV side, which should help Ashok Leyland. The greater play is happening within the auto ancillary space, where we are expecting the growth to be much stronger, A, driven by OEMs, B, driven by recovery in some of the key exports market, and C, because of the premiumization and penetration of EVs. A lot of these ancillary companies are reporting improvement in realizations and profitability. So right from some of the EV suppliers to the battery manufacturers to tire companies, we believe that auto ancillary as a segment could outperform the OEM segment going forward.
OEM definitely looks exciting as far as autos are concerned, but some other sharp movers today that we are seeing, especially in the broader market space. And I just want to pull up the top gainers today. The insurance pack definitely stands out. Quick word from you, Rahul. On some of these insurance names, life insurance and general insurance, everything firing today. Is there anything which looks sustainable here on the charts?
Yeah, so, the insurance companies have taken off, some of them prior to the budget, especially the kind of quality moves that we've seen. Now, HDFC Life is one stock that we like in particular. This stock has been sort of underperforming the sector, but now seems to have caught up. And there is a big breakout which is happening around the 700 area, which should see change orbits, and which could mean the stock could very well head towards its previous highs of in the vicinity of 760, 770. So another 10% upside is something that we are seeing at. In the short term, yes, the stocks are pretty overbought, but the way the market has been, it has been, overbought stocks have just kept on becoming more and more overbought. So, the best thing to do is, to just catch in on the momentum, have trailing stop losses and participate in the rally as much as you can.
Okay. Rahul, I don't know if we already did this, and you've given your stock ideas and all, but if I had to ask you for one BTST or one STBT, one, likely it will not be an STBT, what would it be?
Yeah, so I would go with Escorts. That is something which is closing very, very, very good. Volumes are on the higher side. I feel, a quick 80-100 rupee jump can be seen on Monday, and possibly structurally the structure looks very good for a target of 44.50 on the upside. So Escorts is my BDST for the day.
Okay. And Siddharth, last question before we let both of you go. What's resulted this up move in pharma? I mean, the numbers haven't been that great. Cipla notwithstanding, the CDMO players, Laurus, Divi's, etc. are also flying. Why a rally there?
So I think again, Laurus numbers were quite weak. Mankind did an acquisition that kind of excited the market. Cipla numbers are good. I think it's again a lot of sector rotation happening. Valuations are comfortable, and expectation of a strong numbers, especially from the domestic market. So I think the clear guess is that that is what is leading to this sharp rally in some of these pharma names.
Siddharth, Rahul, we'll leave it at that. Thank you so much for taking the time out. Have a good weekend, and if you're a bull, we'll certainly have a good weekend because we have done really well. About 10-15 points away from all-time highs, but just look at the way the market has shut shop. It's closing, trending higher, closing in nearly at the high point of the day. In fact, at the high point of the day. Can we just pull up the Nifty 50 chart intraday, and you'll see a trending move higher. closing in at the high point of the day, which is a great sign. And just the heat map, Tamanna comes in as well, actually, and just look at the kind of gains that have come in. Those 4 stocks still stay in the red. The stocks which have made a bit of a pull come into the top 10 include a Cipla, which after the results was up 2% and now up 6%. The Adani twins about 3.5% apiece. IT continues to rise and shine. Bharti Airtel has gained some more spunk. So that's the nature of the move. Everything in the green, hardly anything in the red.
Yeah, you're going to close in all likelihood above 24,800. Quite convincingly. Not yet at that all-time high.
Closing highs, yeah.
But yeah, closing highs definitely. So that's an exciting day. Look at the advanced decline ratios, and you'll just see the kind of, how secular this growth trend is. It's not just the Nifty today. It's a huge gap over here, and a lot of stocks have moved in the broader markets as well. Let's pull up the mid cap and the small cap just to give you a sense of how all-encompassing really this up move has been. Nearly 2% up on the Nifty mid cap 150, small cap index also doing okay, relatively looking like the laggard today. But among the sectors, and important to pull up the sector.
We hit the highs.
As well.
We hit the highs. We hit the all-time highs.
All right, let's just go back to the Nifty chart.
Yeah, but 24,855, 28,860 now, Tamanna, so we hit all-time highs.
Wow, all right. So that's a great note to close. Just as we've closed, we'll see where it's settled finally after a minute or so, but you have hit the all-time highs on the Nifty. What a fabulous Friday it has been, and an end to a week which really looked a bit scary there in the middle on budget day. Budget afternoon was this week itself, Niraj. I know it seems like a long time, but it was this week itself. Budget afternoon, mid-speech, you had this plunge, and the climb up from there has truly been astonishing. 24,849 is where we are closing.
Well, quite stunning, really, what's happened. Yeah, but let me pull up the chart that Tamanna usually pulls up, which is the BSE 500 winners and losers as well, just to show the mid-cap end of the spectrum. I'm sure there are losers. Tamanna, you might want to talk about the gainers, but just mark the losers. MMTC.
That's a pullback. So MMTC was running because in the budget it was made clear that non-revenue generating assets would be disinvested by the government. MMTC has tons of them. So that's a stock that was running up a couple of days. It's pulled back, signed its bad numbers.
The results were very wobbly.
Numbers.
Soba was that block deal that happened, as a result of which the 3.5% cut.
I think Federal Bank, because of the RBI guidelines and an additional buffer for retail deposits, is hurting them. New India, all insurance companies, Paytm has had a huge relief on Ant Financial's investments since Chinese investments are coming in. So that's moved. So you've had a whole host of reasons for stocks to move overall. Just before we wrap, I want to pull up the weekly chart because we've been talking about what this week has looked like, and it's been an important one. So we'll just pull up the Nifty weekly chart before we close. And really, the entire story is here, Niraj. Just look at it. Week on week, it's barely moved.
Stock. It's like a small cap stock which has a spike on the announcement of a result.
At the end. Because see, week on week, it's barely moved. You've pretty much just regained everything that maybe you lost around Tuesday, budget day. That was the hit. And then you've come back strongly. 2 days to swallow that LTCG and short-term capital gains tax hit. Maybe all of that real estate hit as well. And then decided that after all, nothing better than equity. I think that's the discerning or enduring thought of the week. But that's all the time we have. Thank you so much for watching. From the team that's put this show together, Niraj and me, we're glad you've joined us, and we will see you back Monday morning on India Market Open. Meanwhile, a lot more on the other side on NDTV Profit.